Hi everybody, my name is Mary Redmond and I'm talking now about the Australian dollar US dollar pair. I think this pair has great potential for the downside in the coming months, and I think a lot of people think that. Everybody's trying to jump in and pick the top and they get squeezed out of their position, which is unfortunate. It's always really difficult to pick a top or a bottom, but there are a lot of important things going on this week and a couple of important indicators that are showing that the top could be very close or very near. And the Australian dollar is really, as much as it is a carry trade pair, it's really a proxy for global growth as well as a yield earner, because it's trades in very close tandem with the Dow Industrial Average and the S&P. And despite the fact that those are considered to be U.S. averages, most of the companies in the Dow average earn over 50% of their revenues overseas, so it's really a proxy for global growth. And the reason that the Australian dollar has prospered so much in the last few years is the explosive growth in China. And of course they benefit directly from that because the Chinese demand for commodities, for iron ore, for coal, for steel, all of these things that Australia can provide, because the Australian continent is very rich in these resources. And in addition, there's been an incredible bull run in commodities, as everyone knows. Some of this is due to the quantitative easing by the Fed. Some of this is just due to the fact that there's been incredible growth not only in China and India, but in other areas of the world, and there's just increased demand for commodities. Well, something happened yesterday that might give an indication of a few cracks in this commodities bull run, just the beginning. And that silver opened up down 10% yesterday, and that may have been on the news that Osama bin Laden was killed, but it might also just have been on the fact that this has just been an incredibly momentous run and it really can't continue forever. And gold also trades in very close tandem to the Australian dollar US dollar. Gold may take its clues from silver. These trends have accelerated and they both made big spikes up out of their Bollinger Bands. And also what you want to keep an eye on for the precious metals is the price of copper. And a lot of people don't realize this, but copper is probably the true leading indicator and the more important precious metal than silver and gold, because it's not used by as many speculators. It's more of a true leading indicator of industrial demand for precious metals for use in semiconductors and a lot of other applications. Well, if you look at the price of copper, and that's been over the last, just since the beginning of the year or the last 6 months, it's really been range bound. It's not making these explosive moves up like gold and silver. And it looks, if you view it over a year's chart, it actually looks like it might be topping out. It might be forming a real type of what looks like might be a rounded top. And it's hard to say, but it's also a lot more difficult for copper to make these explosive moves up, since it's priced in tons and it's not as manipulated by the exchange traded funds the way gold and silver. And the 30-day warehouse stock levels of copper are pretty high. And what you can see, there are different ways of viewing the graphs of copper prices. There's different services that have it, but you know, looking at a 6-month spot chart of copper, it looks as if it's more range bound. And I think what the markets could be predicting is that the second half of 2011 is going to be a lot more difficult for commodities. And you've got a combination of 3 different factors. You've got a couple of different factors. You've got the Chinese continuing to raise rates, and I know nobody's paying attention to it anymore because the Chinese economy is still growing at explosive speeds, but they're continuing to raise rates to try to put as much of a lid on commodity prices as they can. You've also got the quantitative easing, which is going to gradually taper down. And I think the dollar made a sharp move down last week after Bernanke's testimony in the Fed meeting, which may have been too much of an exaggeration because it really wasn't that much of a surprise to anyone. I mean, the fact is the Fed is going to gradually remove this stimulus. They're not planning on raising the Fed funds rate for probably another 6 months, but they are going to remove it. And when they remove it, there's a tremendous source of support for the stock market and the commodity markets that's just going to gradually go away. So what copper could be doing is signaling that, you might want to take a profit on these precious metals. And you've also got the volatility index. Well, when the volatility index makes these big spikes up, as it sometimes does, these are generally, that was a good buy for the Australian dollar. This was a good buy. When the volatility index is low, you really want to be more cautious with the stock market, because it means that everybody's long and the worries are basically dissipating and everybody's expecting the trend to continue, and that's when any type of a shock to the system can cause a change. So if there's any indicators that are going to change this week, it's going to be the RBA meeting and probably the employment report in the US. And the employment report is the most important economic monthly report, because Bernanke and the Federal Reserve have made it pretty clear that they're going to gradually remove the stimulus. The most important thing that they care about right now at this point, in my opinion, is the employment market and the labor market. And if we could see a few more months of consistent job growth, the way we've seen in the last couple of months of 200,000 jobs created per month, you could be pretty sure that the stimulus is going to be removed and they're going to go back to a normal Fed policy. So the real issue now, you've got, in addition to speculators in the market, small speculators, you've got a lot of big institutions who have been riding this trend to get the carry interest on the Australian dollar, US dollar. And the real issue here is whether or not they are going to start removing this early in anticipation of the end of QE and take their profits, or whether or not they're going to just ride the trend until all of a sudden it collapses. Well, it's very difficult. You never want to really try to truly pick the top or the bottom of a trend, but if we have a combination of two events, if we have the RBA possibly being a little more dovish, saying that they're not as concerned about inflation, and if we have a strong employment report on Friday, then I think we could be setting the stage for what could be a good short in the Australian dollar, US dollar. So what I would like to look for is what I usually look for on a 4-hour chart. If I see the 8-day RSI, if I see that moving below the 23-day RSI, and I see possibly a spike up on the Bollinger Bands, which looks like there's a big red candlestick forming, and it would be the opposite of what you see here. You see a big spike down with a pivot point and then a move back inside. Well, it looks like we had a little something like that, but it's not quite big enough. So I'm going to keep an eye on this one this week. I think it's going to be a great short coming up in the weeks and months ahead. But it's going to be, of course, everybody knows it's very difficult to pick the top, but I think the top could be coming, and it might be this week or next week. So we're going to keep an eye on the RBA and the employment report.